Today on the CEO Barbecue, we're looking for gold in Canada's Valley of Gold, also known as Val d'Or. And we're doing that together with Cartier Resources. If you want a bullet point summary of this conversation and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, the company you're about to hear from has paid us for the production of this video, which means that this is not research, it's an advertisement, and you should treat it as such. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. And please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased in multiple ways. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Cartier is listed as ECR on the TSX Ventures Exchange, where the average 3-month volume is 160,000 shares. The stock's 52-week high is 16 cents and its 52-week low is 5 cents. With a market cap of just over 66 million Canadian dollars and just over 441 million shares outstanding, today this is a 15-cent stock with a 50 and a 200-day moving average at respectively 12.5 and 11 cents, which means the stock is now trading above both of them. In terms of ownership, there is one big elephant in the room here. It's actually a bit of an eagle, not really an elephant. And that eagle's name is Agnico, and it holds over 27% of Cartier, and insiders here hold just over 2%, something we'll talk about later on. There are just over 88 million warrants, with the bulk of them, so 76.7 million to be specific, being related to the financing that closed recently on April 23. They are 18-cent warrants with a 5-year term, and there are some about 11.5 million additional warrants that expire in about 2.5 years from now, so in February of 2028, and they are 16-cent warrants. In addition to that, there are 22.2 million options with a weighted average exercise price of 16 cents and an expiry range between 2026 and 2030. All in all, that means that there are roughly 550 million fully diluted shares, meaning an increase of about 25% in shares outstanding could happen if all dilutive securities get exercised, which would then result in about a 20% ownership dilution if, and that's always a big if, but if all dilutive securities actually get exercised. And of course, none of this accounts for potential dilution down the road, which is not unlikely given that this is a pre-revenue company that operates in what is a very capital-intensive industry. Talking about capital, I'll now be going through their latest financial statement, which shows me the numbers as of March 31st, 2025. At the time, the company had in total about 1.7 million Canadian dollars in current assets, mostly in the form of a receivable tax credit to the tune of about $800,000, and the cash and cash equivalents sat at about $660,000 with some receivables and prepaid on top of that. Now, the financial picture for Cartier has changed quite a lot, as I just alluded to, since the effective date on this financing, though, as they raised close to $11.5 million. And they've also optioned out some of their properties, which we'll discuss more in depth later on. But ultimately, the financial situation is now quite different. In terms of liabilities, the current liability side of the balance sheet at the time had about $400,000 on it, but over half of it is not an actual obligation that the company has, at least for now, because it's the liability related to the flow-through shares. And that number, they only have to pay back if they don't spend the flow-through dollars on time, which they think they will, though. And also, this will have grown by now, given that the recent financing closed after the effective date on this financial statement. And again, that included some flow-through as well. Basically, no long-term debt here, though. There's a small lease obligation, and there's some deferred income and mining taxes. But again, that's not an actual out-of-pocket debt for the latter, at least, or at least not for now. Moving on to the P&L for the 3 months that ended on March 31st, the total amount spent on G&A shows up as $500,000, so $500,000. But that includes just under $100,000 of share-based compensation, as well as some depreciations, all of which are a non-cash expense, leaving the actual out-of-pocket cost at a neat 400,000 Canadian dollars. For the quarter, that's an average of about $133,000 a month. Again, specifically for the quarter ending on March 31st this year. Biggest chunk of that expense were the salaries combined with the consulting and professional fees, which represented at about 50% of the spend. Second biggest chunk was what I would call, collectively at least, I would call it marketing, but that includes stuff like business development, roadshows, investor relations, analysts, sponsors, and so on and so forth. Together, they represented about 40% of that $400,000 spent for the quarter. Exploration expenditures here get capitalized, so we'll have to go over to note 7 of the financials, which shows me that there wasn't really all that much exploration happening during the first 3 months of this year, as the total spent was just under $300,000. And so normally this is where I'd provide a breakdown of the exploration expenses, as well as look at the ratios, such as your drilling to marketing ratio and the exploration to administration ratio. But again, not all that much drilling or exploration was going on in that specific quarter. But that is changing significantly now as the company's planning on drilling 100,000 meters. And of course, we'll talk about that later on in the conversation. But as always, I would just like to remind you to be cautious because your capital is at risk. And please visit setterplus.ca to view the company's full financials and specifically pay attention to their full year financials once available. Enough accounting for now, though, because I've got a brief overview of the company here. And ultimately, the story of Cartier is one of gold and specifically Quebec gold, and even more specifically, the Valley of Gold, as I mentioned at the beginning. The company's flagship project is called Cadillac, and it sits just east of Val d'Or in the Abitibi Greenstone Belt. The project combines the historic Chimo mine and the East Cadillac property, hosting a current NI 43-101 resource of 720,000 ounces indicated resource and a 1.6 million ounces inferred, with a 2023 PEA outlining a 117,000 ounce per year, 10-year underground mine at a post-tax NPV5 of $388 million and an IRR of 21%. Note, though, that this was all calculated at about half the price of gold today. So specifically at $1,750 an ounce gold. CapEx at the time was calculated at about $340 million. Now, though, Cartier talks again about a fully funded, after the recent financing, 100,000 meter drill program to update that mineral resource and PEA. And that, of course, is going to be the focus and conversation today. What that's all going to look like specifically, what Philippe here is hoping to see in the core, how he's dealing with the Canadian permitting process, First Nations, financings, and a lot of other questions are hopefully going to get answered by the end of this conversation. But for this to actually become a conversation, I'll have to shut up already. And Philippe, I'll give you the word here. But first of all, thank you so much for sitting down with me today.
Well, thank you, Antonio. We've talked before, but the story has changed significantly. So I'm hoping we'll get that message across.
That's right. And there is a lot to talk about. I kind of want to take it holistically here today and do a proper in-depth barbecue, if you will. And we'll go through the smell test and all of that in between. But just before that, Philippe, I'm trying to get a very basic understanding of what the story of Cartier really is. Because again, you've got your own money. You'll be drilling 100,000 meters. And we'll talk about that later on. But Agnico owns well in excess of what I would consider a blocking interest. So is Cartier an independent explorer, or are you kind of at the mercy of Agnico here? Talk to me about that whole situation there.
We consider ourselves an independent explorer. Okay, Agnico does have 27%, and I'll get into how that came about. But people should be focusing on the 73% that they do not own, and they own the shares. They don't have any specific ownership of the Cadillac project, which we are developing. So yeah, the Cartier story, as you alluded to, Antonio, did evolve significantly in the last 10 years. We rose to many challenges and obstacles. So I'm going to walk you through very high level how that happened. In 2013, we purchased the Chimo mine the past producing mine, the Chimo mine project, which was a very small project in terms of area footprint. And that's when Agnico came into play. They owned a 19.9% stake in Cartier. And then we started drilling and never looked back. However, by 2021, we had exhausted the room on the property, and it was kind of obvious that this thing was going to extend to the east, to the west, and at depth. And owing to the property boundaries, we were basically hemmed in. So then we did a deal with O3 Mining to acquire 100% of all the surrounding ground, east and west of Chimo, and obviously at depth, it would our project or the zones plunged onto their ground. And we paid in shares. So O3 became a 17% owner of Cartier shares. Agnico exercised this participation right at that point, which went unnoticed by the public, and they topped themselves back up. And then in short order, obviously, Agnico had 15 or 16%, and O3 had 12 or 14%. And then we were free to continue exploring. That's when we delivered the PEA in 2023. Now we're in 2025, all right? So late 2024, Agnico acquired O3 Mining. And that's when the situation was created. And you're quite right. When a company goes above 19.9, technically it's considered a hostile takeover bid. And in this case, that was not the case. The TSX and obviously the Securities Exchange, they recognized that. And all we had to do, Agnico and ourselves, was to redraft an investor rights agreement, which I would invite people to go see. We filed that on SEDAR. It's an important document. And that's where people will see that Agnico owns 27%, and they do have participation rights. So case in point, when we raise money and print shares to continue exploring, they have a right to take that exact percentage of the raise. And that's why after concluding the investor rights agreement in March this year, we then did a financing that closed in April, May, and we sit pretty with about $12 million in cash. And as you pointed out, roughly about another $1 million in receivable from expiration credits of past expiration. And therefore, we're fully funded to do this 100,000 meter diamond drill program. Again, we consider ourselves an independent explorer with a senior producer, a very senior producer, owning 27% of the shares, and obviously, backing and supporting our 100,000 meter diamond drill program.
Quite a few things there to touch upon, and we will be back later on to it. We'll table that for now, though, and we'll kick off that smell test here. And I've known you for a while. We've done this before as well, but we'll just go through it again for the sake of this conversation. And we'll start off with the man running the company himself. Talk to me about yourself. Who are you? Why do you think you're the right man for the job?
Okay, I'm a geologist by trade, and most of my colleagues would consider me a prospecting or field type geologist. That's what I used to do. I was involved in high level drill programs, drilling VMS and gold throughout my career. And in 2003, ROFR Resources, a senior company in which I was working for, had the Louvecourt deposit here in Val-d'Or. Shut down the Louvecourt mine, and they're moving their exploration offices to Toronto. And I had no appetite for a $2 million mortgage. So I decided to bootstrap a consulting company, which is Grayton Mining, Inc. And my first client was Alexis Minerals Corporation. And Alexis actually signed very comprehensive and large option agreements with, on the one hand, Noranda, and on the second hand, ROFR Resources for the Val-d'Or camp and the Matagami camp, the Rouen-Noranda camp. And I was managing VP exploration then. By 2006, we had launched production on the Lac Urbain gold mine, and I decided to leave the Alexis Minerals Corporation and branch out on my own. And we bootstrapped from the basement, my basement, Cartier Resources. So I'm the founder of the company. I've invested a lot of money. from scratch. And originally, Cartier was generating its own projects.
Hmm.
And we did a lot of early stage grassroots exploration. And that's my calling. I'm a geologist by trade. I also have a diploma in management. So, and because I'm bilingual, all the my past employers kept, giving me, marketing and management type responsibilities. So I naturally rose to and improvised at first to be a CEO. It's not something you learn at university. It's it's a skill set you develop with time, and the markets teach you very precious lessons. So you become a better, you theoretically, you become a better CEO as for junior exploration as you move along in your career.
Yeah. There's a couple of things there that I want to touch upon as well, but to the point of having started this company a while back, looking at the stock chart here, you're one of the oldest issuers, I think, on the TSXV. You've been listed for almost 20 years now, but
Yep.
but again, the stock price has consistently kind of gone down over those years, right? It goes from upper left to lower right on the chart, and it's still far away from that $1.22 that you traded at during your first year of trading. And I'm bringing that up because my typically my second smell test question is asking the CEOs if they've made money for shareholders before. But again, the chart here tells a story already. So how do you explain this performance over the last almost 20 years here?
We have actually switched business models 4 times. This is actually Cartier 4.0.
Mm-hmm.
The first Cartier 1.0, was prospecting projects that we staked, right? And that's when we had very tight share structure. We went from, I think we listed at 54 cents or 45 cents. We shot to $1. And then right after that, in 2008, 2009, there was a market downturn. And yet we were doing low cost, high reward, prospecting, early exploration type work. Then we got into Cartier 2.0, where we went further than just grub staking, trenching, and mapping. We started to drill our own discoveries. All right. That by 2011, 2012, yet again, the market was in a downturn. And then we sat down, we had $3 million in the bank, and we said, look, we better think this through and be in a better place when the market takes off. So that's when we turned around and we bought Wilson, Fenton, Benoit, and got really lucky and bought the Chimo past producing mine from bankruptcy sale. That was 2013. And then we embarked on Cartier 3.0, where we focused on drill testing deposits, not a lot of exploration or grassroots work. Now, having evolved or developed on the Cadillac project, which is a consolidation of our previous Chimo mine project, and the East Cadillac project that O3 has, we've delivered 4 resource estimates, a PEA, and yet again, in 2022, 2023, although, we had delivered on our promises, the market was not, it wasn't a favorable environment for juniors. A lot of our competitors were, and even ourselves were delivering good news, but the market wasn't taking. So now we're at Cartier 4.0. Cartier 4.0 is targeting, the objective is to demonstrate that in and around the Chimo or on the Cadillac project, we're dealing with a mining camp. So people are sitting there thinking, God, this guy is just relentless. He's just, but it's a sizable, very ambitious objective. And I think people are saying, oh, I want a quick return, and we're just not designed for that. Mm. And I think our sponsorship by Agnico demonstrates that. So the answer to your overall question is, yeah, I think investors are attracted to stories that are highly promoted and that have a lot of novelty to it. And Cartier is just focused, laser focused on um, discovering mines and bringing them to a level that, somebody out there is going to purchase them, and or that eventually might even go to Cartier 5.0 and say, well, listen, we'll build it ourselves. And that was the good and the bad of our PEA. We built a PEA, a standalone PEA, where we'd build our own mill with credible costs. And but then again, we have a situation where the project can be brought to a level where it can be amenable to toll milling, like other companies are doing. So we have optionality on this thing, and we're finding our way through it. And it's long in the tooth, but that's what it is. The value is there. We have to find a way to unlock it. And I'll preempt probably one of your questions. One big part of what's happening in 2025, 26, and 27 is the rebranding and retelling of our story and where we're at and why people should consider Cartier value, the value proposition and investment opportunity.
Well, the value proposition, specifically how you plan on unlocking that value, is definitely going to be a big chunk of this conversation as we move away from the smell test here in a couple of minutes. But just staying focused on what you do right now, do you currently have any other positions, albeit executive positions or board positions with other companies?
I do have a board position with what used to be Quebec Copper and Gold, 29 with the OR Group. Yep. It's a large copper project in the Chapet area, but that's about it. I'm laser focused, 100% dedicated to Cartier, being the founder and a very significant shareholder myself.
Well, my next question is typically about skin in the game and about being a shareholder. But again, after almost 20 years of being public and obviously many financings along the road, your insider ownership has dropped to about 2%. Is there a plan in place or an idea to increase that insider alignment with shareholders here?
Well, I've been buying from the inception of the company. Now I'm up to, I think, 6.8 million shares. Out of pocket, $1 million. So I align my interests with that of the shareholders. So I have bought those shares in the market, high and low. And I'd like to point out that when CEOs or insiders buy shares, they buy when they can, not when they want. The average investor can buy whenever they want. The definition of insider trading is buying with insider information. And so you most like when you're doing the type of work I'm doing right now, I'm blacked out quite often. So my end game is obviously to make a lot of money for our investors, and if that happens, I will make money myself.
Mm-hmm. Is that you said you blacked out and you can buy whenever you can? Can you? And is it?
No, I cannot buy whenever I can. No. I can only buy. I can only buy when they do not have any material information.
Yeah, well, that's what I mean. You cannot buy whenever you want. You can buy whenever you can. So essentially, there's brief periods of time when you can.
Exactly.
Do you have the ability though, and do you want to be on the bid, supporting the stock price as you roll out this drill program here?
I have in the past. It's going to be very difficult in the next year or so for me to do that. Because with two drills operating 24/7, very short holes, drilling known gold areas, expansions, and I suspect there will not be a lot of opportunities for me. Having said that, I have invested over $1 million throughout the 18 years. I'm quite proud of that. I have a good track record. It's out there for everybody to see. And when I can, I will continue to buy. If not in the open market via opportunities such as exercising my warrants or stock option.
Yeah. You probably hold a fair chunk of options as well right now. I did see that there's been some insider exercising of options as well in the SEDI filings. So that's part of it as well. Well, actually, talking about the other insiders here, talk to me about them. Who are they? And let's maybe talk about the people pointing the drill rigs for this drill program. I know you would be part of that team, but who else?
Okay. Well, first and foremost is our recent appointee to Vice President, Renan Deroff. He's a young geologist who's been with us over 17 years. This young man is the fourth Vice President of Cartier, and he knows the project inside out, and he is the designer of that vast program that we will all experience in the next 3 years. Renat's skill set is a geologist, geochemist, and he's soon to be a resource guy as well, because we're bringing in Leapfrog. We're actually going to bring in Leapfrog into the company. Then there's Nancy Lecourcière, who's our CFO. She's been with us for quite some time. The five board members are Daniel Massé, our chairman. He's a financial planner. He's been with us from the very beginning, inception of the company. There's Mario Jacob, who is a lawyer by trade, but he's been our board member since the inception of the company. He was with Virginia. At the time, Virginia got taken over by Goldcorp and then by Cisco Royalties. He sits on the board of Diamond Jewel, listed company. He also sits on the board, as of recently, I think, Dundee Environmental Services. Yeah. Then there's Alain Laplante, who's the chair of the audit committee. He is a CFA, CPA, over 30 years experience. And he doesn't sit on any of the boards other than ours. And then there's Mirza Tavares Bello, who is a sustainable development expert, I would say, bachelor's and master's. She was formerly VP Sustainable Development for O3 Mining and actually joined the board as part of that transaction. Mirza is now an independent consultant, and she will help me and Renan execute the environmental aspects of our work in the next 3 years. Then there is Manuel Pfeiffer, who is an investor and an acquaintance that I have come by through my marketing in Europe, mainly Brussels, Frankfurt, and he's developed an interest for Cartier. And in the past 3 and 5 years, we've met quite a bit. And in 2024, he joined the board at our request, and we conducted a thorough interview process. We're quite conscious that he's in Europe, so there's a time difference. So we have to accommodate all board members, for these meetings. And he brings a perspective of how European investors think and shop for investment opportunities. So that's about it.
That's a good overview. And Manuel is one of those rare Belgians who actually speaks German. So I've met him as well. What is do any of them or you personally or any other insiders personally own a royalty on any of the projects?
None. Okay. Absolutely not.
Yeah, that's the right answer, especially by adding the absolutely part. Do any insiders, board, or executives provide services to the company? And now I'm talking about the, outside of your regular management activities. I'm talking about helicopters, camp, something else in between, drillers.
No, absolutely not.
Also the right answer by adding the absolutely there, Philippe. Still in the same topic, still within the smell test, I want to talk about or keep talking about incentives, and specifically 2025 incentives, given that, again, you're planning that very chunky drill program here. What is insider compensation going to be based on during that process? As in, what are your KPIs going to be tied to? Are we talking discovery success, a specific MPV number, market cap, share price? How are you going to reward your people based on what?
Our people are going to be rewarded strictly through the traditional stock option process. We do have stipends for the directors. they work quite hard. The people on board are not rubber stampers. I'm very proud to say that when I call them into action, they are there and they devote a lot of hours of their time. I try not to exaggerate, but I think we have an appropriate and very level of compensation for the board of directors. That's disclosed in our financial statements as well, and it's comparable, and even on the low side compared to other juniors. But other than standard stock options, there's no bonuses tied to, as you pointed out, resource numbers and NPVs and stuff, because then that's obscene and almost vulgar.
Well, it's interesting to speak to someone who thinks about it that way. It actually doesn't happen all that often. I think it also happens more in like people in Quebec have more your opinion than, let's say, people in Vancouver, people in Toronto might have different opinions on how that works. But this actually might be a good segue into talking specifically about that business plan, the plan for unlocking value, if you will. And again, going back to really what we touched upon at the beginning, but is the end goal here for Cartier to define something that is Agnico sized and then sell it into them? Or how do you see, again, unlocking that value, the business plan?
Well, the business plan for Junior 15 or 20 years ago was to make a discovery, wrap around it some resource, and then it would be taken out by seniors, right? I've been in this business over 35 to 40 years. And starting in the early 90s, that was the scheme. Seniors were exploring less and less. Juniors were showing up. Actually, C-suite people from the senior world were spearheading juniors. And then for a while in the 90s and early 2000s, when a junior would have a success, it would be taken out.
Yeah.
That has changed a bit. It used to be when you market, people would say, well, you have to have a 43101. And so juniors started delivering 43101s. And actually what we've seen is seniors saying, well, okay, go ahead, mind the market, use a junior like an ATM, and have the junior do all the resource estimates and the PEAs and even get into the feasibility studies and the permitting stuff and try to spot the red flags. And then they come in very late, which is not fun. And so now the juniors have to rethink their business model and say, really, I'm going to walk the plank for you? No, thank you. I have shareholders to think about, and so I think. Well, a lot of investors think, oh, this is going to happen. There's going to be a takeout, so that's the end game. I'm going to wait around for that. No, don't do that. Look for juniors that actually are focused on building value. Value cannot be denied. So true discovery and true value will not be denied. And I've spoken to C-suite of many senior mining companies. Believe it or not, taking you out at $3, $4, $5, $600 million is nothing for them if you deliver the value. All right. So, and obviously when you have a $60 million market cap, yet you think you're worth 600 million, that's not going to happen either, because they can't go in and bid 1,000% above market. So it's, I think some of your previous CEOs that you've interviewed have addressed that situation. That environment where you sit and wait for to be taken out is not a winning strategy. So you have to focus on keep building value. And when you have an asset such as ours, like the Cadillac project, a camp scale potential, you got to keep doing that.
That's part of the reason why I'm asking that question in the first place. I mean, it's specifically having Agnico in there, if they're the only reasonable outcome for Cartier shareholders, that turns it into a bit of a challenge or a bit of a risk here, because how do you achieve a competitive full value price for the asset, even though you might have built value through the drill bit, which again I understand you're attempting to do here? How do you realize that value if you have someone with a blocking interest here without other potential bidders at the table? And is there something in place to prevent you from being a price taker in a bull market?
That's a valid perspective. And my only answer for that, one of the answers for that is, well, they own 27%, but there's still 73% out there that is can be claimed. That's one point. The second point is it's not like for now as if Agnico is the only player in town. There's El Dorado down the street. There's Westo. There's IM Gold. There's Goldfields. There's other seniors kicking around. And there are juniors, junior intermediate players that are looking for value. I mean, you alluded to the fact that our first PEA came up with a mine plan of about 117,000 ounces per year. Well, that's a nice production rate. Obviously, there are different iterations to that PEA. Our job is to build value and to demonstrate that we're dealing with a mining camp. And a mining camp is usually a collection or a cluster of 5 or 6, 2 to 3 to 4 million ounce deposits. So the target here is 12 to 15 million ounces, and that should be a multi-generational asset for a company that wants to set up shop and start producing gold. The project is situated close enough to town so that it's got full service and available workforce, but sufficiently out of town so as not to ruffle any social feathers and environmental issues, right? So it's quite an attractive asset to have. And now that we have acquired the extension to the past producing mine, we're going to be able to address that targeting approach in the next program. And that's the bulk of the program is 600 diamond drill holes over a 15-kilometer stretch, going back on established and known gold endowment showings that were discovered since the 1930s and 40s, but were just shelved again because of property boundary issues.
Mm-hmm. Has there been any knocking on any doors in the meantime, though, Philippe? I mean, have you spoken to any of the other producers in the region? Have they come to knock on your door, or have you knocked on theirs?
You know very well that I can't answer that question because it would be crossing the line. Mm. You could suspect that's part of my work, right? Mm. You could suspect that everybody has the same questions that you were asking a while back. And we've always been very transparent. We have a huge data room, and we have a project now, and you've seen in our last press release with the Verify AI approach that it is a very robust data set. And what we've done throughout the summer is we've compiled all of that, and we're bringing that to another level of consolidation of data. The resource estimates, the PEAs, and all these. So people out there can suspect that not only will we be drilling, but we'll be looking at a new resource estimate, a new economic, vision of this thing, metallurgical work, environmental baseline studies, and all that. We're attracting eyeballs to it. That's all I'm going to say. Hmm.
Well, I do know you're talking obviously to Agnico, and that might be really the reason why I'm asking about that is because I'm thinking about timelines in that case. I mean, could you expect any of the potential partners for this? And let's just strictly talk about Agnico, because obviously that's all disclosed and you talk to them. But could you expect them to move within a timeline that works for the shareholders of a cash-hungry junior as well? Like when do they need additional ounces, or when would it? Are they on the same timeline as you? Essentially, is what I'm thinking about.
No, they have a much different timeline. They have, listen, Agnico of 2016 and 2020 is not the same Agnico as 2025. In the interim, they merged, or they took over Kirkland Lake, and then Goldfields forced their hand and they bought Yamana. So in short order, they went from having 40-ish strategic investments, which we were part of. Then they inherited the 40-ish from Kirkland Lake and the 20-ish from Yamana. So now they're managing or overseeing, I don't know, maybe 100 strategic investments, 100 different juniors. And you would think that, you know, and they didn't press eject on any of these, right? So you would think that they're managing their strategic investments or their exploration plays via these juniors that are exploring for them. You would think that they're mining in the camp, so they have an issue where they want to keep their mills full. But listen, historically, you've never seen Agnico overpay for assets. They're never the first to bid, but they never get drawn into a sloppy auction process, right? So, and that's why they are who they are, and you know, and we're one of their backyard plays, and we own a sizable chunk of the Cadillac Fault. And if you look at the maps, they've sewn up a lot of the Cadillac Fault in the last years. But I digress. Your question was, they don't have the same timeline. Obviously, an $80 billion company has other challenges and issues. And you'll note that in the IRA, Investor Rights Agreement, that we filed on CEDAR, there's a chapter there that basically explains how the technical committee works with Agnico. Yes. So we have the benefit of tapping into some of their insights and some, you know, they have no authority or voting power on the program, but we have the benefit of meeting with them and exchanging ideas as to how we would orient, you know, certain drill holes and do things. And that's, I call it free consulting from one of the best in class companies out there.
Do they get any ROFRs or back-in rights or anything else like that?
No, it's all spelled out in the Investor Rights Agreement. They have a participation right, obviously, yep. As long as they maintain above 10%, right? So you can see them not participating in future acquisitions or raises only because that participation right or that, you know, climb back up is not in any way threatened. In any way, shape, or form unless they go below 10%. And then obviously there are other things, but I mean, it's not like there's no blocking stuff, I would think.
Yeah. What about you personally? Do you guys, executives or directors, do you get any compensation if you sell the assets or change of control fees?
Well, yeah, there's change of control. If there's a change, we get a compensation if we're taken out and we're not carried through into the future organization at a equivalent level. So obviously, if we're taken out by another company, a junior, intermediate, or senior, and I lose my job, well, at least I'm compensated with 2 years worth of salary. Mm-hmm. It's spelled out that's obviously it's all spelled out in the annual information circular that when we go to the AGM.
Yeah. Why I'm asking that is to prevent essentially a situation where you know, you sell at a very, very undervalued price just to sell essentially. But what you're saying here, I mean, just
hold on. When a process like that is launched, obviously you must understand that the board of directors is involved. There's fairness opinions from bankers, and we can't just ignore that, right? Because you're liable. And if there's an offer out there to take over Cartier, I mean, the compensation is not going to be a blocking issue. Mm-hmm. Really, if that's a blocking issue, then it's not a valid offer.
Well, it all comes down to where your importance is as you know, as a board and as a CEO. And again, if that's why I'm checking, like, how much money have you put in the company versus what are the change of control fees? Because if you have a $5 million change of control fees, but you've only put $50,000 in the company, that could skew things. Again, not the case in your case, luckily, but that's really where I'm coming from with these questions.
I'll point out that 4 of our directors are ICDs. And you alluded to the way boards or governance is, in different jurisdictions. An ICD or an administrateur agréé, as we say here in Quebec, are members of the board who have gone to university to specifically get a degree to become an accredited director type thing. Mm-hmm. And that's a designation that they have that we're quite proud of that. So they're very, in terms of their fiduciary duty, no, you're not going to sell Cartier at a devalued price because we're fed up. No, we've milked this company for so long and blah, blah, blah. No, that's not going to happen.
Yeah.
Not on my watch, anyways.
And Philippe, I'm sorry for kind of sticking to it or going back to the Agnico thing. We're definitely going to move on here in a couple of minutes, but it is a big part of the Cartier story, at least the way I see it. So when you talk to them, what is it that they're telling you about about Cartier specifically? Because sure, they're giving you a big chunk of money here, but they are an almost $100 billion company, right? So big in that case is relative. It's a lot of money to you. It is a lot of money to most of us, obviously, but to them, maybe not so much. So is this more of an exploration gamble for them, or do they see it as strategic? What are the conversations that you have with them?
It is strategic because we are in a tier 1 jurisdiction. Mm-hmm. It is strategic because it's right. It's almost in their backyard, and if this turns the right way, it will be mill field for any one of their 3 mills. And as I alluded to earlier on, the senior companies now do this a lot. They have strategic investments in juniors that they bet on because they're in the right jurisdiction, they're doing the right type of work. And for instance, if Agnico has 100 juniors and the weighted average of each junior is about, $4 million worth of exploration work every year, then they could boast having $400 million of exploration being done to their analysts or bankers, it's absolutely true because they're focused on pouring ounces, right? When we have conversations, it is skewed to the fact that what the type of stuff that they like to see, or what are the thresholds? What are the types of stuff that they like to see to get them moving? Obviously, we've seen in the recent acquisitions, they focus on gold. They focus on mineable gold. They stay away from stories or organizations that are at risk or delinquent. So I think we check all the right boxes. So that sends the right message, right?
Yeah. Well, I do want to finally move on and talk about some of the things that you're doing right now. And I'm kind of teasing the drill program because it's the big meat and potatoes here, and we're still kind of on the appetizers. But tailings are part of the mix as well for you, or part of the at least short-term business plan. What's the plan for maybe processing those or selling them? When can that bring in some money?
Well, I'll tell you, we a month ago we launched a process call for tenders for a group of engineering firms, and there's 3 mandates, of which the tailings, the Chimo tailings program was part. We got those tenders recently. We're reviewing those, and we will be awarding those contracts. And the way that works is we asked these independent engineering firms to design a sampling program on that tailings pond, or in that past producing tailings impoundment site, to assess if there's any gold, if it's the recoverability of that gold, and to back of the envelope calculate if this is a worthwhile if this could bring money to the till. Mm-hmm. So we are, I think 2 or 3 weeks from awarding those contracts. And it's what I'd like to say about this is quite interesting. Is Chimo, for the initial parts of its producing mine life, was not processing any sulfide ore. That was being processed off-site. When they decided to produce, it was like it was clear of all any sulfides, and they produce only from the silica fraction.
Hmm.
So the tailings at Chimo have no deleterious elements recorded, and the tailings at Chimo have a full environmental liberation certificate from the Ministry of Environment. So it is imperative that if we go back onto that tailings pond and we sample, that we don't disturb anything that would trigger an environmental liability. And fortunately for us, it's just gold-rich dust that is pre-milled. So we have to assess: is there gold content? Is it sufficient for us to, for it to be economic? Just look, if there's 10,000 ounces of gold at $4,000 per ounce, that's 40 million bucks.
Mm.
If it costs you $20 million to scoop it up with a backhoe and send it to a mill, all in, you've netted 20 million bucks, right? Right?
Yeah.
And so essentially it's as simple as that. That's what we're walking through. And it's really apropos that you're asking that question, because in the next weeks or month, we'll be reporting on where we're at in that Chimo tailings project, specifically.
What about timing? I mean, let's just assume that it goes through and it makes sense and you could make money on it. What are kind of the steps in terms of timing? You award that contract. What's next, and when could you expect that process to start? Again, forward looking and assuming that everything works out financially.
Listen, I don't have the ability or the information to answer that question. I would like to think that it's something that can be done within 3 years if it's properly supervised and you file the appropriate remediation plans, blah blah blah. But that's not my skill set right now. That's specifically why we had that done by independent engineering firms,
Right.
and not some these. The call for tenders we sent out to 4 engineering firms that have done this before. So they'll walk us through the timelines. I have not even seen that plan yet.
Mm.
When I do, I will most likely press release that.
Yeah, and I'll
And
have
you'll
you
have
back
all your
on.
answers. You'll
I'll
have
have
all your answers, yeah.
and I'll have you back on for another barbecue at that time. No, I'm just it is interesting though to think about what the permitting process might look like and everything else in between, because it's not. I mean, it's not a small part of it. It seems like there could be something in there, so that's why I'm really asking about it. Let's talk about other stuff though, and you touched upon the history of the asset as well, and I think it's actually befitting to the region and this asset to do a whole episode or conversation about the asset itself. So we'll do that at a later point, talk about the history, talk about the geology and everything else. But now talk to me about what you're doing this year specifically. Again, you're talking about 100,000 meters of drilling. That's a lot. Why that much? Why not, half of it, but spread it over a longer period or save the money? Like, why go as aggressively at it right now?
All right. I'll back up a bit. What led to the filing of the 3 first resource estimates was assessing the mineralization, the geometry, the geology, the alteration, getting to know the system in the initial years. And it was incremental 25,000 meter diamond drill programs. And by having drilled 58,000 meters, we delivered those 3 resource estimates, as you pointed out earlier on. Then when we acquired O3, there was a Nordo West, which was a smallish deposit near surface that was right off the eastern end of the main system. And obviously there can't be 2 43-101s for one issue or one asset. So we merged those 2 together. But keep in mind, by now, we've drilled about 100,000 meters on a very small stretch, maybe 3.5 kilometers. And of that 100,000 meters, we've only used We've only included 58,000 meters into the 4 resource estimates. So understand that there's another 40, 50,000 meters of recent drilling that is going to contribute to a 5th resource estimate. Mm-hmm. To answer your question specifically, when we did last year's program, the 2024 program, that was 25,000 meters on a 10-ish kilometer stretch. We did not go back to the central Chimo mine area. We only drilled the eastern and western extensions to field validate and confirm the historical gold showings. What we had done is when we acquired O3, there was about 700 or 800 diamond drill holes, historic holes that had been done from the 1930s, 40s, 50s, 60s, and so on. None of the core was available. We went out, we had all the diamond drill logs and assays. We went out to the field. In some cases, we were able to locate the diamond drill hole casings. In other cases, we didn't. So the 2024 program was about field testing and confirming these historical discoveries. And that's when it dawned on us, and here's the answer. Damn it, we're dealing with a mining camp here. Over a 15-kilometer stretch, we're dealing with a camp scale target. Like not one mine, but several mines, a cluster of mines over that 15-kilometer stretch. If you look at the Cadillac break, every 20-ish kilometers or so, there's a cluster. There's the Val-d'Or camp, there's the Malartic camp, there's the Cadillac camp, there's the Rowan camp, there's the Virginia Lake, Kirkland Lake camp, and so on and so forth. Along this break, it's an empirical observation. There seems to be a camp or a cluster of mines every 20-ish kilometers. Mm-hmm. And these clusters occur over a stretch of about 10 to 12 to 15 kilometers. So the 2024 program was that. It was us saying, whoa, we think this is what we have. And that's what I communicated to some of the Agnico people. And they said, yeah, we think you do. So you don't go back and drill a 5,000 meter drill program. It's not in line with the target that you think you had. So the 100,000 meter addresses the need in short order to drill this 15-kilometer stretch on all the gold zones that we know, infill drill in between the gold zones to really determine where is the center of gravity of these things? How many tips of the iceberg do we have on this 15-kilometer stretch? And that's why we're drilling 100,000 meters, 600 diamond drill holes from 0 to maximum of 300 meter depth. And why 2 drills? And why 18 months? Well, it just so happens that from a logistical perspective and from a budgetary perspective, that's the sweet spot. If you go beneath 300 meters and if you add more drills, the cost is not. It's exponential. It's not linear. It just goes up. Yeah. Hear this. We're going to be drilling in the order of about $110 per meter.
All in? Is that assays and everything in between?
All in. Assays, geology, technical services, diamond drill contract. Just geology, obviously not my salary and the photocopier and stuff like that. And it's a function of the fact that, well, the 3 things. One, at the time that we did the call for tenders, even though the gold price was going through the roof, not a lot of juniors were offering contracts. And the ones that were, the likes of Cartier and Radisson, Probe, and so on, were offering sizable. And we were able to get a very good diamond drill contract price and continue drilling with the same contractor that we've been drilling for 10 years. And they know the lay of the ground, and they also have a sweet spot for, they make money drilling at these costs. Then there was the assaying labs. For some reason, they lowered cost. Geology, we have a very small team. We outsource that. We bring in a core logger. If we were to bring in 2 or 3 or 4 more machines, the cost structure of our program would change, and then we would tip into maybe $150, $175 a meter. But even that is not expensive. Mm-hmm. So that's part of it. The other part is obviously when this program is competing with remote programs, and the diamond drillers like the preferred program, which is almost downtown Val-d'Or, to one which is in the high north, where they're fly in, fly out 2 weeks, and that adds costs. Or as if you're out in the Andes or in BC and you're on the side of a hill, and, the challenges there are. I feel for these people because it's not because they don't manage their programs well. It's just because that's the cost structure out there.
Mm-hmm. Yeah. Well, that is that's it. It's a very good overview, actually, to think about, and kind of sets the stage to talk about this drilling here. What would you consider success, though, from this program? What's the main goal of these 100,000 meters? I know it's kind of hard to say because it's just so much, and there's probably many goals here. But let's say we're talking in, I don't know, 12 months from now. We look back. What do you want to see in order to be like, yes, this was a successful, spend of shareholder capital?
Quite simply, that our original thesis that we're dealing with a mining camp, like the zones that we've labeled Bateman, Contact, Portal, that by going back there and drilling, we have continued expansion of the zones, and we're able to put more meat on the bone around these areas outside of the main central area, and that people say, yeah, obviously our shareholders, oh shit, they're going to be back for another drill program. But by then, I think we're going to light up the right interest from the right parties, and they're going to say, damn it, these, we better take over. We better come in with 10, 20 machines and just clear the table. A success for me would be clearly in 12 months' time that a lot of the zones that we were targeting have delivered and continue to grow. And obviously, then we're stuck with a situation. Well, the main vector along the Cadillac Fault has always been and will always be at depth. LaRonde, for example, Agnico's LaRonde mine goes down to 3 kilometers. And you look at the Cadillac camp. Just the Cadillac camp is like 30 million ounces from Westwood to LaRonde. Mm-hmm. Right? And that's an 8-kilometer stretch, and that's 30 million ounces. And I remember when I graduated in 1986, the Agnico team had just punched the top of the LaRonde mine at 800 something meters at depth. Right? Now, on the Cadillac project, most of the zones that we'll be targeting were barely tested down to about 100 meters. So who knows? There's blue sky, and there's a lot of upside on what we're tackling right now. And some of our competitors would be tackling this with 2 to 3 or 400,000 meters. For us, we've gone from 25 to 100, and we can manage that efficiently, and that's what we're going to do.
What do you efficiently is also an interesting word here, but what do you think in terms of critical size? How big could this asset get on the back of this 100,000 meters of drilling? Like how many ounces would you consider success if they were added to the current resource?
The program is not designed to measure ounces. The program is designed to indicate, hey man, we're looking at a camp here for systems that could potentially be 2 to 3 million ounces each. So you're looking at 10 to 12 million ounces. But then you'd have to drill them out at depth, and that becomes costly. For me, that spells success. But clearly, at the end of the 100,000 meter diamond drill program, I think will be in the 4 million ounce, that we'll be able to provide people.
Mm. How deep is this, or the deepest holes of this program going to be?
The deepest hole will be in the order of 300 meters. Okay. We're drilling 600 holes, 100,000 meters, so the weighted average is about 175 meter in length.
Right.
Some of the holes are really, really short, and some of the holes they go down to the 120, 150 meter vertical range.
It is. It seems like and it is clearing up to me as to what the setup is. It's a rather simple setup, I think. Like you have the money, the drill holes are planned. You'll drill it if it's there. Shareholders make money. But what if it isn't? I mean, could you reasonably do another financing and keep going after this? Because sometimes you have, success from the perspective of the market. So you drilled something and the share price goes up, but sometimes it's what people call geological success, which it doesn't mean it was a failure. It just means your stock price didn't go up. But as a junior, you kind of live and die on your stock price.
Listen, after this 100,000-meter diamond drill program, if the stock price hasn't moved and we weren't able to light up another area, then I'm going to be scratching my head. All right. The first thing what you try to do in our line of work is you want to fail fast, right? And you don't want to fall in love with your project. And so far, we have not failed, even though the market hasn't realized the value that we've built. We have not failed from a technical and geological perspective, and none of our programs have failed. So statistically speaking, if we're going out there and we're drilling about roughly 30 different targets, 75% of which are directed at established gold discovered areas, and another 25%, which are just like, really low risk, but blue sky areas or bluegrass areas on the project. And, we've got everything going for us on this program. So we're really excited. Again, another thing, and one of the cost controlling features of the program is the project is accessible year round, but obviously some areas are more swampy than others. So we're not always going to be drilling the holes that we want. We're going to be drilling them in an order that is logistically cost effective, right? Because if you want to go drill out in the middle of a swamp in the middle of in the summer, you're looking at a higher cost of drilling per meter. So we're going to reserve the more swampy or wet areas for the winter months. And we're going to be drilling the road access. Well, they're all road access. So that's another thing. And people may scratch their head, why aren't they drilling this area? And why would we be drilling? Keep in mind that we've been drilling this project for the past 10 years. So one of the reasons we're able to get more mileage out of our exploration dollar is a combination of all those facts.
So where does that leave you in terms of timing then? In that case, you start now. When is that going to be done? Or are you going to be announcing assays as you go? Just talk to me about timing here.
Okay. We are starting, the drill start in the week of the 25th of August, in like about 2 weeks. And they drill 24/7, 2 machines for a period of 18 months with a small break in during the winter months, at Christmas, like a week or two. And then and we end the program in March or Easter of 2027. Now, that is the original 100,600 drill hole program. Keep in mind that if one of the zones starts to light up massively, we're not going to interrupt. The original plan is not to interrupt the original program, but then to carve out, build a new budget, and bring in new machines on this, on any spectacular discovery. We wouldn't want to be distracted by some specific area and then not complete the entire program. Enough of that. Historically, that's what has happened, and that's why this part of the Cadillac break still does not have its full, is not mapped out as a camp. It should be, but it's a history of interrupted exploration work, and that's not going to happen this time.
So in terms of announcing assays, I suppose then it's going to be batched.
Regular pace. No. Regular pace. Since these are regularly short holes, once this gets started and the first holes get into the lab, I think maybe every 2 or 3 weeks there's a press release. We're not going to drill one zone and wait till we have all this. No, we're hoping that our shareholders can follow the story, right? Otherwise, No, you get an assay result. You've technically speaking, you got 48 hours to disclose that.
Okay.
Uh,
So
Timing the market is not, well, maybe other juniors do that, but
hmm. Well, but you essentially you're saying you're going to have assay results more or less every 2 weeks
sequel.
for 2 years.
Yep.
Okay, that is
Look back at the last 10 years. It, for Chimo for a very long period of time, 2013, 16, 17, 18, 19, up to 1920 2020, roughly every 3 weeks, and people forget that.
yeah, yeah. Well, memory is short in the junior mining space, and sometimes to a benefit, sometimes to a fault. Or what else are you doing in the meantime? I assume some met work is going to happen as well.
And that's part of the call for tenders that I spoke a while back.
Mhm.
Uh, the four engineering firms. There is the met work. There's the geochemical characterization of ore and waste. If we wanted to toll mill, well, we have to produce for one of these mills. Um, Pedigree of what they're dealing with, right? And then there's the Chimo tailings. So in the last call for tenders, what we call the environmental package, those three mandates: the environmental baseline study, the metallurgical or geochemical characterization of the ore waste, and the Chimo tailings. We should be able to provide our shareholders with, who the who and what was awarded in the next month or so.
Okay. But then, so you're going to have, outside of assay results, you're going to have some metallurgical results as well to announce to the market.
Metallurgical results, launching of environmental baseline studies, the drilling progress and results, as well as potentially, if all goes well, if the update and compilation of the previous drilling of 2024 and late 2023, maybe even a resource estimate.
Hmm.
Because the resource estimate that we have currently and the PA, if only because of the gold price, is stale dated. I wouldn't say it's non-current because it is current, but I mean obviously the gold price has gone up. Our understanding of the geology has gone up, and we've added almost double the amount of drilling that has fed the initial estimates. So that is also evolving. Drill results, PEA, MRE, and metallurgical and environmental stuff. I mean, there's a lot on our plate.
Yeah. And again, going back to the timing though, because you closed that financing April 23, I believe, this year.
No,
Um,
April 2025.
yeah, yeah,
Yeah,
yeah. I mean, the 23rd of April of 2025.
yeah,
Yeah, right. And so that leaves you 4 months to September. In
yeah.
terms of, I'm thinking about the 4 month hold, coming free trading essentially. Are you going to have news in between? You said you're going to have news on who you've selected for the studies and everything, but any material news to potentially manage any free trading shares that come into the market?
The only way I could answer that is there was a sizable financing, but there was like 7 or 8 subscribers.
Yeah. Even on the
So
flow through, I mean, the back end of that flow through, where that ended up.
yeah.
Yeah. Okay.
So I don't suspect it because of the pedigree uh, of the subscribers. I don't suspect that any weakness is going to be seen from that.
Hmm.
Like, I mean, this was like, yeah, I'm the CEO. I signed the subforms, and there was like 7 or 8. So
Yeah.
subforms. These are sizable institutions and blocks, of which Agnico.
Hmm. What do you think is the biggest risk then between now and finishing this program? Is it strictly geological risk? Because again, to me it sounds like you're funded. You know what you're doing. We talked about the partners. We talked about basically everything that I could come up with at being a potential risk or some of the biggest challenges. What about from your perspective? What's the biggest challenge here?
The biggest challenge is I don't clean up my act in terms of marketing this story. And I'll let you know that another thing that we have not talked about is we're significantly changing our marketing strategy, a new website, new banners, new outreach. And now that the program, the contracts, everything is on track to get launched, I can devote 100% of my time getting out there and telling the story, which I intend on doing. And we're going to hire, an assistant to help me do that. So it's going to free up a lot of my time. One of our risks is we're a very small team. We don't have 10 people on the payroll. It's just 2 people, right? So one of the risks is that we don't make good use of our time and our money telling the story. We got to get out there, tell the story. Geologically, we've got that covered. In terms of financing, got that covered. We have no control on the gold price, no control on competitor activity, right? So, yeah, I think we really do have to up our game in terms of marketing and investor outreach and telling the story. And to that, well, I invite anybody out there to point out what we need to do. Obviously, it's always very easy to say, "Oh, Phil, you toss money here and toss money there." And no, I disagree with that. Good, fast, and cheap is always been our motto. And
Do you have a budget though for marketing? How much money do you want to spend on it?
right now, the budget I filed for a board of directors approval is about 400,000 to 500,000. Outside of my salary and my stuff. So that's road shows, gold shows, and that's for the year. Uh, so we're getting back out there. You got to remember from 2021, or essentially people tend to forget COVID as well. From 2020 to almost 2024, we were on a handbrake like a lot of juniors. And those I saw a bunch of other competing junior companies come out with stellar results, and their stock didn't really move. But now's the time to get back out there and tell the story. Obviously, if the corp dev the budget is in line with your exploration budget, fine. If marketing is much more than your exploration, then it's got a problem.
Yeah. And that's, so you said 400, 500. Okay. For the full year, that's 12 months. I assume it's not for the fiscal year.
No, yeah, for the moving forward from now,
Yeah.
we never award anything that we're not fully funded to pay.
Right.
So,
Yeah.
well, it happens in other cases. So,
Permitting, we touched upon that as well. Could that be a challenge, or is it just fully permitted? You can do the 100,000 meters. You can just go ahead and drill everything, or is it a continuous process?
it's a continuous process where there's a new thing in Quebec, what's called the ATI, Autorisation de Travaux à Impact. Fortunately for us, we're still operating on the previous one, and we've requested new permits. So we're good to go until March of next year. But we've also launched another permitting process to keep us going. So it's an ongoing process. We don't foresee any issues. There's the municipality of Val-d'Or, and there's the Lac-Simon First Nations Algonquin community. We know we're always in discussions with these people, and yeah, it's an ongoing process.
Yeah. Well, that locals is something that I was going to ask you about, but I think you touched upon as well. You said you're close enough where it's in a normal area essentially, but you're not too close where it's going to slow down the work in any case. So, but you do have those agreements, I assume. What about the First Nations in that case? How's that relationship? Talk to me more about that.
Well, we've been dealing with the Lac-Simon Algonquin First community for the past 10 years, or even prior to that, and they are not at a level right now where they're signing impact benefit agreements for projects like Cartier. They've signed some with Agnico in the past for the Canadian Malartic, so on and so forth. But on the exploration front, we're developing that concept with them as we speak. And they're a very small community. So it's the process there is listen, tell them what we're going to do, which they've been following us for the last 10 years, listen to their concerns, and work towards the continued developing that relationship, and if need be, memorandum of understanding, but nothing that would pigeonhole or commit a future producer or a producer from coming in and say, what the hell, why did you sign this? So and they understand that, the First Nations or even the city of Val-d'Or understand that. Ultimately, it's the person or the group that's going to develop this that has the responsibility and the authority to sign on impact benefit agreements and the likes. Mm-hmm. You can't commit to things that you can't deliver.
But it's not like they could come in tomorrow and shut you down, could they? I mean, you can just go ahead and drill, right? Because that's essentially what I'm trying to make sure here.
Yeah, I will answer to the affirmative of that. It's not like that's happened. Any junior, and that's including current, any junior that's delinquent and disrespectful is looking to be shut down. But I don't know of any in our part in Rent here that does that. So no, I that's not a risk I assume.
You're in a valley here, allegedly a valley of gold. So topography, I assume, is not a challenge, but something that I typically ask about. How does the land package look like topographically?
I don't know why they call it a valley. It's called Val d'Or, but it's there's no valley here. It's just flat.
Okay.
It's really, really flat. So there's no geography or geomorphological obstacle, other than wetlands, swamp areas where you don't want to go in and tear up an environment unless you come upon a sizable deposit, or then you deal with the administrative environment and they give you the right permits and the how to approach it. Wetlands and rivers are the only things that you gotta if you look at the Google map, you'll see that there's a lot of clear cutting here. Mm-hmm. So the forestry companies have really lumbered out some areas. So the first pass people that probably affected the ground or the lay of the land have been forest companies. So if when an exploration company steps up to the plate, their impact is actually quite minimal. And on our new website that you'll be seeing in the next few weeks, we hired some people to come in with a drone, and you'll see the footprint of a drill pad.
Yeah.
And it's just beautiful to look at.
Yeah, that's good. That'll be interesting to see. I'm looking forward to see that new website as well. I think I've been through most of it, Philippe. I think it's been a very good sort of overview and setting the stage for future conversations that we're going to have. Yeah. We'll do that deep dive on Val-d'Or and the Cadillac fault and everything in between, if you will, in a future episode here. What's the most fair criticism that you're hearing of Cartier out there when you talk to people?
Honestly, people keep seeing, Agnico has a blocking position. Oh, you have too many shares outstanding. Your share price is too low. Your grade isn't high enough. It's, we hear these a lot. And even though you provide answers to that, I hear a lot of things, but as long as we keep moving forward, as long as we have obviously sponsors like the likes of Agnico and other people I can't mention, then you're on the right track.
Well, the number of shares outstanding is kind of one of the first things that you notice when you open it up. It is high. I mean, then definitely the number of fully diluted shares, it's over 500 million. Is that still manageable in your opinion? And would you be planning a rollback anytime soon?
No. I mean, not coming from me. People that don't have skin in the game are always the ones that come up with the rollback solution, right?
Hmm.
But people that have a skin in the game, well, the rollback solution that it never comes to mind. Um, you alluded to the warrants and those options. Well, then our cash in the bank situation would not be 13 million. It would be north of 25. So those who think of see that as an overhang, well, got to keep in mind that that's an extra 12 or 14 million bucks with no fee, no broker fee, no banker fee coming in. So, and then it's all going to the same sophisticated institutional or corporate investors because they are the ones that hold those warrants and stock options.
Yeah. Yeah. There's no acceleration phases on it if I
Yes, there
understand.
is.
Oh,
Yes,
okay.
there is.
I've missed
The
that.
the warrants, the 18 cents warrants have a trigger at year three. If you're trading at 18 cents for a 20-day, then we could call an acceleration of those warrants.
Got it. Okay. That's interesting to know as well. 3 year period there instead of five. Because again, I was not very happy. I think not a lot of people were happy with the 5 year warrant there, but it's good to have that acceleration there in that case.
Yeah,
What am I forgetting to ask you here though, Philippe? I don't want to waste your entire day. I've already did my best at wasting at least half of it here. But what else am I forgetting to ask you? What did you come here hoping to talk about that I've not brought up?
quite honestly, and that's just because of the way I'm designed, I like to pace myself through things. And you alluded to the fact that we'll be back and I'll be, commenting on the adventure as we go along.
Yes, sir.
But the one thing I do want to leave this interview is we will be delivering a pretty dense news flow from this point on. Like early September onwards, it's going to be a rapid clip of press releases. And I'll be out in Europe in August, starting in Munich, and then Frankfurt and the road shows. And then I'll end in Monaco, and then I'll be back at the Dutch Gold Mess. And the new website will, list the events and the marketing efforts that we're doing, as well as doing a deeper dive. So by the time we get to the second interview, I'm hoping that people will be prepared and listening.
Yeah. Good. Well, I'll definitely be looking forward to that. And I really do appreciate you sitting down with me. Thank you so much for your time.
No problem.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should, under no circumstances, be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."